Well, you found the perfect new home, but you have to sell your current home first, right? Or do you? Today, we're going to tell you about how you can make an offer with no contingencies. Stay tuned. Welcome into the Smart Mortgage Show. Ben George with Bill Litney is regional president at Cross Country Mortgage. Glad you joined us today. We're talking about making offers with no contingencies, which is a big, obstacle for a lot of people, Bill, right? That found that home that they really want to buy, but know they need the money from their current home, the equity they've built up there to help pay for it. It's a real problem that a lot of people try to solve, right?
It is. We run into it a lot, especially, Ben, in our market where the sellers, the people, that are the current owners of the new home that you're trying to buy, they may have multiple offers and they're not willing to take a sale of house contingency. That means they have to wait until you sell your house. And what if you're unreasonable about how much you want to sell it for? Or there's a million things that could go wrong. So how do we eliminate all of that? That is the solution that's been really helpful in this market.
Well, the product we will talk about today will allow the buyer to remove that sale of house contingency from their offer and allow them to realize that equity from the old house before it's sold and settled, which is a great opportunity for people. And again, if you want to learn more about this once we're done, text the word LEND to 21,000. You'll be able to get on Bill's schedule, sit down with Cross Country Mortgage, begin talking about this product and just exploring your options in general as they want to help you find the best solution financially to get you in that new home. So take us into this product, Bill, the name, and then kind of give us some details on what all it entails.
Yeah. So basically there's a couple of different product offerings that are going to help to remove a sale of house contingency. Okay. And then what you're going to notice is I'm going to refer to, because it makes it easier, the old home, which is the house you currently live in and you're eventually going to sell, and the new home, and the new home being the house that you're trying to buy or purchase. Okay. So the first component is having an element of instant equity, which really is a bridge loan. So a bridge loan is where you can access the equity in the old home before it is sold. So a lot of times when we talk to someone buying a house, we say, where is the money coming from to buy the new house? They say it's coming out of the old house. Well, if you have to sell the old house to realize those funds, that's a sale of house contingency. It's frowned upon. Nobody likes those. They're rarely ever accepted, at least in our market, many markets around the country. So how do we eliminate the need to sell to access the equity? We use a bridge loan.
All right. So that instant equity is the key to all this. So as you get into that a little bit, Bill, how does it actually work and kind of what do you need to know about that if you are the home buyer?
Yeah. So in order to access the equity through a bridge loan, you need to qualify. And just assuming that you have really good credit, one of the things that you need to qualify for is you need to make sure there's enough equity in the house. So a bridge loan, they're not going to let you pull out 100% of the equity, because now if you don't get top dollar for your house, you won't be able to sell it. You'll be upside down. So they limit the loan to value on the bridge loan typically to about 85%. So you need to have enough equity in the property to put a bridge loan in place. So that's one component. The other is, do you qualify? Can you carry the mortgage on the new home, the old mortgage or the existing mortgage on the old home, plus can you carry in the debt ratio, the bridge loan payment as well? And this kind of rolls us into the second component of the guaranteed, of this product, which is the guaranteed backup contract. So the guaranteed backup contract, what it does is we put a contract on the old home that says we will buy the house. Okay. And Fannie Mae and Freddie Mac and other investors, there's a couple of different twists to this theme, but essentially it says, if you have a non-contingent contract to purchase the home, then the new loan on the new home says, we won't count the debt on the old home into your debt ratio. It removes the debt. So the existing mortgage and the bridge loan are removed from the debt ratio.
Very interesting. So how does that process work? I mean, I guess, a question I would have as a home buyer is if we have that backup contract, but obviously it's probably not going to be for top dollar, right? To obviously protect yourself. So what if I can get better offers in afterwards? Does that impact that at all?
Yeah. So what we've seen with this product is the guaranteed backup contract has an assignment clause built into it, which means your realtor of choice is going to list and sell the home, and they're going to assign the contract to that new buyer. We do not want to purchase the home. You have 6 months from the time that you settle on the purchase of your new home to sell the old home. After a 6-month period, that's when we would need to purchase the home using the guaranteed backup contract. The rate at which these homes don't sell within that 6-month period, it's less than 0.5%. It's very, very low. It might be 0.1%. The goal is they do not want to buy your house, and they really want you to sell your house for top dollar. They do not get in the way of the real estate agent. They do not interrupt. The way that the real estate agent's commission structure worked is not interrupted in any way. So, very clear on that. That's a great point. This is a tool to help remove the debt ratio. Now, if you live in an area where the actual inventory is, at 12 months and the sales cycle is longer, this might not be the right product. This might be an issue if you can't sell your house in 6 months. Most of the markets that we work in, houses are going under contract in 2 weeks to 30 days at the most. So it's not a problem. But if you have that sort of a market that you're living in, we want to be very cognizant of that because we don't want to get into that situation.
Yeah, that's important, I guess, obviously to know and to be aware of going into this. So after you have those things in place, Bill, you've qualified for that bridge loan, you got the backup contract. How do you move forward from that point?
So once we have the guaranteed backup contract, what we do is we know that we're willing to put the contract in place. So now when I write a pre-approval letter, in the pre-approval letter, there is no contingency because we've removed it. There is no requirement to sell the existing home, the old home, before the purchase of the new home. And actually, Ben, we've had some situations where we've lined up the contract. We've actually not put it in place. I've had some buyers that said, I think I can sell it. I want this contract in place. Okay. Now that there's a cost to the contract. The cost is $2,500 to put the contract in place. But I've had quite a few scenarios where we've gotten it prepared, but then the person buying the new house, the new home, sold the old home beforehand, or they got a clear to close, or they got a cash offer, non-contingent offer, doing the same thing the guaranteed backup contract does, where we didn't even need to put the contract in place at all. So there's probably a lot in there, and we're happy to break that down on a call, in a consultation, but we're looking for what's the best way to save you money. Sometimes it's to have that guaranteed backup contract waiting in the wings and not use it at all. Other times when we need to use it, we execute it, we put it in place. You sell your house before the 6-month period's up, and creates a smooth transaction that way as well.
Very good. Great information. I know it's a great option for people that are looking to use that equity they built up in their current home. And there's a lot of people in that situation right now that are wondering, hey, how do I get out of this home and into the new one, and have to find that balance of selling and buying. So important to know that. Any other requirements, Bill, just to be aware of for anyone that's curious about this?
Yeah, well, I do want to just mention that the guaranteed backup contract is one option. We also have a buy now, sell later product that allows for the same thing where you can remove the debts from the old home from the debt ratio, but no contract is required. What they would like to see in this case is that you have a letter of intent that you're willing to list the house within 90 days, 20% equity in the home, and reserves in the bank after settlement to carry that payment. So another twist on it, buy now, sell later. In fact, this whole product suite is buy now, sell later, but this specific portfolio product where there is no guaranteed backup contract, there's a intent to sell, some equity in the old home, and you've got money in the bank after the purchase of the new home, does the same thing in the end. That product can be useful in certain scenarios. So we've got a few different arrows in the quiver to kind of solve this problem.
Again, Cross Country Mortgage can offer you these options. And again, feel free to want to discuss this and actually just have a conversation about what's available, try to get a better understanding, see if you qualify. All these things can be done just by texting the word LEND to 21,000 to get on Bill's calendar and begin talking about these products. This is a great option for you potentially. It's not going to be a perfect fit for everyone, but again, it could be something that's just right for you and what you need. So to explore more, learn about other additional products that Cross Country Mortgage offers, please get in touch. Lend, text that to 21,000 and hit subscribe on this channel as well. We're going to be talking about additional products and how Cross Country Mortgage can solve home buying problems for people through a lot of the things that they offer in future videos as well. So make sure you stay tuned for that. Any final thoughts, Bill, before we close it out?
Yeah, well, Ben, to your point, these products can be technical. There's a lot of puzzle pieces, but we're here for a very hands-on, client-centric, consultative approach. You know, with AI and a lot of automation with computers and things like that, our process is very old-fashioned. And for something, listen, there's certain things you can buy on Amazon without a conversation. A pack of gum, there's no need to dive deep. But when you're borrowing hundreds of thousands of dollars and purchasing assets that are, from 200,000 to 2 million, having somebody to walk you through it and explain all the details is paramount. That's the way we operate.
Very good. We'll start that conversation once again by texting the word LEND to 21,000 or check us out online, smartmortgageshow.com. Thanks for watching. Be back again soon. Please subscribe. We'll talk to you then. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.